Good afternoon, everyone. Welcome to this meeting of the Ad Hoc Committee on the Comprehensive Job Creation Plan. I'm Paul Krikorian, joined by my colleagues, Mr. Englander and Mr. Blumenfield, and we're ready to begin today's meeting. We're going to begin taking public comment on item number 1, and then we'll take general public comment at the conclusion of our consideration of item number 1. So I'd like to go ahead and invite up the first few speakers on item number 1, starting with Josh Androsky, followed by David, is it Jete? Okay, and Orino Pinaldo. So come on up.
Hello, my name is Josh Androsky. How are you?
Good, how are you?
Doing all right. I just want to say, when I pay my utility bill to the City of Los Angeles, it goes into a bank that, against my consent, uses that money to fund a series of investments in polluting pipelines and private prisons and weapons companies, and that's something that I feel like the City of Los Angeles has no business doing, putting our money in that. And what do they get from Wells Fargo or any of these private banks in return? They charge $100 million a year in service fees. I just think that's a little ridiculous. And I feel like a public bank would be a fantastic way to cut down the $3.1415 billion of interest the City of Los Angeles pays per year. By the way, 3.1415 is pie, and it just seems appropriate that banks are taking an entire pie and not leaving us a single slice. Thank you.
Thank you. David is our next speaker, followed by Orino Pinaldo, who will be followed by Heidi Kang. Good afternoon.
Good afternoon. Thank you. I want to applaud the city council's moving to support the recent bill proposing a state bank, a public bank for cannabis. But I do want to urge the city to look at public banking as a municipal issue and not to pigeonhole it as a solution for cannabis banking. It is a for-profit industry, and there are other unbanked populations in the state and in the city that deserve equal thought from this body. In addition, I think public banking, and I think it's shown by the Sparkassen Network, the Bank of North Dakota, there are existing models that can provide competitive interest rates and lower costs for the city. I think the CAO's report on its debt policies and how public banking can and might impact that is a very well-written report. I think it's a valid concern that the bank would not have enough scale to offer competitive interest rates off the bat, but I do think that policies and governance can lead to savings, as evidenced by other models. So I hope the City Council looks at this.
Very good.
Thank you.
Our next speaker is Orino Pinaldo, followed by Heidi Kang.
I, Orino Pinaldo of South LA, am for a municipal bank because of experience by lack of savings with no ethical allocation of money. 3 insurances from Wells Fargo caused loss of money. Hidden charges from Bank of America happened also. California Bank had hidden charges to grassroots organizations. The common denominator experiences loss of money by unethical banks. Millions of people, grassroots organizations were abused, and the City Council of LA may be victims. With the municipal bank, there will be savings and an ethical allocation of money for the city and community. And I want to thank you for all that is being done for better banks. Thank you.
Thank you, sir. Our next speaker is Heidi Kang, followed by S. Wayne. Heidi Kang? Okay. Mr. or Ms. Wayne. Our next speaker is Grant Pardee, followed by Patricia McAllister. Is Grant Pardee here? No? Ms. McAllister? This is just on this item, please.
I'll come back for the public.
Yes.
Okay, okay, I disagree with this bank. I really do. I think that billions will be embezzled, and these are Jew-owned banks. Jews run these banks. We washing drug money for the mob, washing child prostitution money. This city council said nothing when Governor Jerry Brown legalized child prostitution up to 18 years old. You said not one word, and that money's going to be washed in this bank. Banking for marijuana, you've been trying to get that all the time, so you can shoot this money into the marijuana money there. And the lies. Mayor Garcetti said in 2015 he spent $100 million on the homeless, and they asked him on what? He said on the police. Police has a $500 million budget already, so money has been stolen. $90 million was supposed to be spent 2017, 2018. It hasn't been spent. So you can easily wash more money like that, the housing money in these banks. We don't need a bank. We need a full federal investigation of the city and its accounting methods and the books.
Wayne Spindler. Mr. Spindler's not here. Luis Gutierrez. Good afternoon.
Good afternoon. My name is Luis Gutierrez. I work for an organization called Leadership Urban Renewal Network. We're a community and economic development organization here based in Boyle Heights. We run multiple micro enterprise programs. We do micro lending for entrepreneurs in low-income neighborhoods, and we also have investment capital for entrepreneurs in low-income neighborhoods. We're in support of a public bank. We think that this is a really great opportunity to figure out a way to fill in some of the gaps that currently exist between lending and communities that are low income and have been majorly disenfranchised by the standard commercial banks that currently exist. We're in the process of analyzing a lot of that data right now, especially CRA data, and we're looking at some really bad numbers in terms of how lending has decreased in these neighborhoods in Los Angeles City and Los Angeles County. So we think that this is a really good opportunity, and we support this effort.
Thank you. Thank you very much. There is a person who provided a profane name that I won't say. So is there anybody else who wished to speak who signed up? All right, then public comment on item number 1 is closed. I'm going to now hold that item on the desk and go to general public comment. So our general public comment speakers, we'll start with Ms. McAllister, followed by the aforementioned profane named speaker, who is apparently not here, followed by Wayne from Encino, and S. Wayne, and then Giselle Mata. Ms. McAllister.
I read the motion, and I have the report of the chief legislative officer, and in here he said that you want to create a comprehensive job creation plan. I think that's just a scam. If anybody will get jobs, it will be the illegal aliens. As I said before, out of 700,000 students in LAUSD, 600,000 are illegal alien children. The children of illegal aliens, Mexicans, Latinos, and Asians. So those are the people who are going to get the affordable housing and the jobs. We have to clear these illegal aliens out of Section 8 housing and affordable housing and get those kids and their parents back to Mexico and wherever they came from. Whatever you do. Now this bank, I know it's going to be a scam. I know it's going to be a scam. You guys are digging yourselves in a deeper hole. Some of you are going to go to the penitentiary messing with this money. And I'm a computer scientist, 30 hours, university hours in mathematics. So I dream numbers, and I see corruption everywhere. I know what you're doing. You're going to get yourself in bigger trouble with this bank.
S. Wayne. Wayne from Encino. Giselle Mata. Hi.
Thank you, Council, for hearing public comment. So my name is Giselle, and I'm with ACE Action. Big federal bank greed has resulted in members of this community having fraudulent accounts opened, which has led to massive debt, heavy fees, wrongful foreclosures, as well as crashing our economy. Now, in an effort to hold banks accountable to this community and to prevent fraud in the future, bank workers, consumers, and unions are working to strengthen the responsible banking ordinance. Banks need to show how they are using sales goals. But here we are, days away from the RFP, and none of the language for the RBO is incorporated. Even when City Council does the right thing and passes a responsible banking ordinance, our community continues to suffer because the rules don't apply to big federal banks. Yes, we need an LA municipal bank to support affordable housing and infrastructure. Thank you.
Thank you. Last chance for Wayne Spindler and the profane named person. They're not here. Public comment is closed on our agenda items and general public comment as well. I should have noted earlier, I apologize, Councilmember Harris Dawson is with us as well, and I expect Councilmember Wesson momentarily. So we'll go ahead and begin then with the report on item number 1. And as Mr. Wickham is making his way forward, members, I want to say at the outset that as we were tasked with the opportunity to examine the issues involved with a municipal bank, we've had a number of very thorough discussions about the opportunities that may present and the risks that may present. And Mr. Herman, I'm sorry, you're disrupting the meeting. I'm going to ask you to leave. Comment has already been closed. Sorry, you're out. You're out. You're out. You're out. You're disrupting the meeting as I speak. You're done. Can you escort him to the door with dispatch, please? And just for the sake of the record, Mr. Herman continues to disrupt as he always does, even as he's being escorted out the door by the LAPD. All right.
Pardon me, Mr. Chair, did you
Yes.
put that item right into the record as well?
Oh, yes, we should probably start with that. Thank you.
You're welcome. Item number 1 is a Chief Legislative Analyst and City Administrative Officer reports in response to motion Krikorian, Rue, Wesson, Bonin, Cedillo, Corretz O'Farrell, relative to the creation of a state-chartered public bank to be named the Bank of Los Angeles. This item is continued from this committee's meeting of October 4th, 2017 and December 13th, 2017.
Thank you, Mr. Williams. Now, as I was saying, we've, in this committee and otherwise, we've had a number of discussions about the wide range of potential benefits that could come from an institution like this, as well as many risks and costs that might be associated with it. So, can you move them along? I'm sorry, even outside the door. I'm sorry, they're disrupting the meeting. I can hear them. I want them moved. No, they got to go. And for the record, Mr. Herman and Mr. Spindler are now standing outside the door saying their nonsense in a way that's audible within this meeting. And so they're continuing to disrupt even after they've been removed. So in response to the discussions that we've had in this committee, the CLA has embarked on preparing one of the most comprehensive reports I think that I have seen in all of the issues we've dealt with. A very thorough discussion of the history of municipal banks, of the various legal issues, cost issues, risk issues, opportunities, existing programs that can already provide some of the benefits that we're looking to achieve with a municipal bank and that might be able to be enhanced. It really is a very, very detailed, thorough, well thought through report. And Mr. Wickham, I want to thank you for that, because it's exactly what I had hoped we were going to achieve through this process, so that we have the tools in front of us to be able to make some decisions about how we can advance these policy objectives. So thank you for that, and let me turn it to you to go ahead and present.
Okay, absolutely. Thank you very much. John Wickham with the Office of the Chief Legislative Analyst. Before you is a substantial report that our office has prepared, and I want to make sure that we give credit to all of the CLA staff who participated in this process. Dora Huerta, Alex Whitehead, Pernita Amatia, Henry Flatt, Ivania Solivaro, all provided significant input on the report in front of you. In addition, we received significant assistance from the City Attorney's Office, the Housing Department, Economic Workforce Development Department, the Office of Finance, as well as Bureau of Sanitation and the Building and Safety Department. We really had a lot of assistance from city departments in trying to fill out the information in this report for you. So we've got a lot of information we could go through today. A lot of the departments are here to help fill in any questions that you might have as we go through. So I might just kind of dive into the report and we'll go wherever you want us to go. There's a great deal of detail in the report itself, and hopefully we can do service to the various issues that are in front of us. On page 6 of the report, there's basically a table of contents that gives you the structure of the report. We tried to set this up in a way to build on whatever conclusions there might be at the end of the day. So at the request of the committee, you had asked us to look at international models, national models, to find out what's going on across the United States in the public banking sector. You asked us to identify what kinds of legal or regulatory models exist for banking. We have a chapter on that subject. We included a chapter that profiles the city's current banking services, because that gives us a snapshot of what we would need in a bank if we were to put our city banking services into this public bank. There are a number of legal and regulatory implementation issues that we cover in the report. Then at the request of the committee, we have a rundown of all of the quasi-banking activities that the Housing Department and Economic Development Department and other city departments do. And then there were a number of things that came up in the course of our research that we wanted to bring to your attention. And then the question, okay, after having done all that research, putting it all together, what would a municipal bank of Los Angeles look like? What would we need to move that forward? And that's where we end. So I'll start with the question of what is a municipal bank or a public bank? And that's one of the things I'll try to be consistent on. We're using the term public bank generally because states can have a bank that would be a public bank, counties, municipal governments, all of the local governments, all of those would be public banks. City of Los Angeles creating a bank that would be a municipal bank. We're using the term MBLA for Municipal Bank of Los Angeles. And so I'll try and be consistent with that, and hopefully I can keep the words flowing that way. But this question of what is a municipal bank, we haven't. The one thing that they all kind of have in common is that they're owned by a public entity, and from there are lots of different ideas of what that public bank could do. And we have a list of things that were mentioned over the course of your committee meetings, as well as ideas and concepts that we've found in some of the research that we've done, such as decreasing the city's dependence on commercial banking services, reduce the costs associated with commercial banking services, ensure that there's equitable access to banking services for all city businesses and residents, generate new revenues to support the city's general fund, provide small business loans, job training loans, student loans, loans for or financial assistance for the development of affordable housing or economic development. Ensure that the banking activities comply with social, ethical, or environmental standards of a degree that other banks may not be applying to. So there's a lot that could be going on here, lots of different kinds of services that could be incorporated in that, but there's no consistent definition of what a public bank is. And so we're kind of starting from, square one. And the report moves forward in that. We looked at a report prepared by the Federal Reserve Bank of Boston, and their advice is that, because the state of Massachusetts was looking to create a public bank, and their advice was the logical starting point for discussions regarding establishing a public bank is to identify the specific purposes of such an institution. So we know that there are lots of different ideas. We know that in order to get someplace, you need to have a very specific concept of what you're going to do before you can do a detailed analysis. And so that's kind of the process that we went through. So that's the big question, what is a public bank? We don't quite know yet. And that's the process, that's our exercise here. The next chapter in our report concerns the international, national, state, and local public bank efforts going on. So I'd like Alex Whitehead with our office to come up and make a presentation on his research and his findings for you on this.
Council members.
Thank you. Good afternoon.
Alex Whitehead, CLI. At the request of the committee, our office researched international, national, state, and local public banks as potential models for the Municipal Bank of Los Angeles. Of the international models, the German Savings Bank Finance Group and the Japan Finance Organization for Municipalities were identified as international public banks that most closely matched the intent of the Municipal Bank of Los Angeles. While these models provide examples of how a public bank could be operated, they differ from the concepts under consideration for the Municipal Bank of Los Angeles due to issues regarding their organization and establishment under national law. Our office also researched public banks founded in China and in Indonesia, but found that both of these banks have since converted into private commercial enterprises. The federal government has not taken any actions on public bankings that have yet been identified. There is action in several states and cities across the nation, however. Most recently, a number of legislative and administrative efforts to create public banks across the U.S. were initiated in the wake of the 2008 economic crisis. Outside of California, initiatives to study a municipally owned bank have been introduced in Arizona, Hawaii, Illinois, Maine, Massachusetts, and Santa Fe, New Mexico. Initiatives to establish a public bank have yet to pass any legislature. In California, the city and county of San Francisco initiated a study that examined the establishment of a public bank and associated legal impediments, with reports released in 2011 and 2017. In 2017, Oakland, in partnership with neighboring cities Berkeley and Richmond, as well as Alameda County, also began studying the feasibility of opening a public bank. The Oakland report is still forthcoming. The San Francisco report has not resulted in further legislation to establish a public bank. Assembly Bill 750 in 2011 and Assembly Bill 2500 in 2012 were introduced in the California Assembly, one to initiate a study of public banking and the other to establish a charter process for the creation of public banks. However, neither bill was adopted. The only example of a functioning state bank is the Bank of North Dakota. Founded in 1919, the BND was established to provide banking support for agricultural interests, commerce, and industry without the alleged fraudulent and discriminatory practices of private out-of-state banks. Among the bank's most significant purposes has been participatory lending with community banks in order to stabilize the state economy. As well, the BND has a long history of making competitive student loans. However, as a result of federal legislation in 2010, student loans now originate with the federal government exclusively, effectively severing a major portion of BND's loan portfolio and disrupting their business model. BND's model differs slightly from the criteria of the Municipal Bank of Los Angeles, significantly from the criteria of the Municipal Bank of Los Angeles. The bank was formed in 1919 under a vastly different system of laws and regulations from those in 2018. As well, the bank was founded under state authority and not that of a municipality. As a further impediment, the initial capitalization of the BND provides a snapshot of what the city might expect. When the New England Public Policy Center studied the BND as a potential model for a state bank in 2011, after adjusting for the size of the state economy, it was determined that the equivalent capitalization funding in Massachusetts would amount to about $3.6 billion. The report also noted that the BND did not contribute to the state general fund until 1945, 26 years after its establishment, which suggests a public bank would take decades to become profitable. Although this report is not focused on banking issues associated with cannabis specifically, recent developments at the federal level have created implications on this subject matter that the Jobs Committee should consider. Attorney General Jeff Sessions has criticized state cannabis laws and called for stricter enforcement of federal drug laws. The Department of Justice recently rescinded the Cole Memo, which had limited the scope of federal cannabis enforcement to areas of particular concern, largely excluding state legalized adult usage, leaving states with recreational and medical cannabis laws unsure of their status with federal law. A number of bills have been introduced in Congress in order to address these complications. In California, SB 930, introduced January 25, 2018, states the intent of the legislature to enact subsequent legislation that would establish a state-chartered bank. This would allow state-chartered financial institutions to work with licensed cannabis businesses to operate within the banking system. the legislature has referred SB 930 to the State Assembly Committee on Rules. The City Council has adopted Resolution Wesson-Krikorian in support of this bill. In conclusion, few public banks currently operate anywhere in the world, and two that had been formed in China and Indonesia have recently converted fully into independent commercial banks. In all cases, authority for a public bank was provided under national and state law. Models that have been identified were formed with authority provided by the national government, or, in the case of the Bank of North Dakota, by a state government. I'm happy to answer any questions.
Thank you. And record should reflect that Mr. Wesson is here as well. On the Bank of North Dakota, you differentiated that experience from our potential municipal bank on the grounds that it was of its founding date, that it was founded in a time well before, I assume what you mean is the regimen of federal and other bank regulations that have come into place since then.
Exactly. It's been grandfathered through a lot.
So I guess that was going to be my point. Is it grandfathered? I mean, is that what's significant, that it began before? Because I can't imagine why a regulatory structure dealing with the banking industry would not apply to existing banks regardless of their founding date. So I wanted to understand that differentiation, and also the fact that it is a state versus municipal bank. What difference does that really make?
Go for it, sorry.
A lot of the regulations that exist today relate to, and we'll be getting to this later in our report, relate to the source of capital to start up the bank, the collateral that's associated to protect the accounts that are, and the loans that are in the bank, that control who is on the membership of the board of the bank. There are a lot of criteria that have been put in place since 1919.
Barriers to creation.
Yeah.
So regardless of regulations on loan practices, or that would apply to everyone.
Exactly.
But barriers to creation would only apply prospectively, I guess.
Exactly. So since they were already in existence, they've been able to meet all those requirements and conform in a way to ensure that they're still able to participate in FDIC and those kinds of programs. Whereas starting brand new, we would have some different barriers to meet those criteria.
And the fact that it's a state institution, you can have a state chartered financial institution under their state statutes. This is provided for. There is no equivalent
in California
for a municipal bank in California as of now.
Exactly.
Maybe there could be, but there isn't now. Okay.
Yeah, and as Alex noted, AB 2500 in 2012 was introduced to do that, to actually set up a regulatory framework for a chartered public bank in California. But that bill never got out of the initial committee in the Assembly, and that subject matter has not been introduced since.
Okay. Now, we went kind of quickly through the Sparkassen model in Germany and the Japanese model. Can you talk a little bit about, why that is different and why that is not replicable, or why it's not as easily replicable here, if that's your conclusion?
Sure thing. So Germany's model is actually 580 different banks that each represent a separate district. And through their organization together, they're able to support their functions. They operate. They don't operate independently, and they're not at a risk of any insolvency. So they're really able to support each other collectively, whereas we'd be putting ourselves in a situation of being on our own. The other issue is the international law is just completely different in terms of establishing this. The establishment is where we're running into issues. With Japan, it's actually vastly different. It is an organization of 1,789 Japanese local governments, and it actually ends up supporting other municipalities when they have infrastructure needs. So really, it's more a bank for municipalities as opposed to anything that would support people within the community.
So they have nationwide diversification of assets and risks.
Exactly.
Okay. Members, anything on this first section? Mr.
Yeah,
Blumenfield?
I wanted to follow up on something you mentioned about the capitalization. You said, was it a Boston model or was it $3 billion?
Yeah, so when Massachusetts was studying whether they wanted to do a state-run bank, they researched the Bank of North Dakota and realized that if they inflated the amount that the Bank of North Dakota used and also used that for Massachusetts, for the actual state, it would be $3.6 billion.
And what's, I mean, that's what it would take to capitalize the bank?
Yes.
And so that's before you can ever get to doing a single loan or taking advantage. That's what they have to actually keep
To get started.
to get started, and they have to keep that on hand. They can't loan that out.
That I'm not, I believe that would be the start of the lending activity. But then you would need, I mean, then you get into the question of reserves and how you're managing all of those funds. So, but the initial capitalization would require about $3.6 billion in Massachusetts.
That sounds very high.
Yeah.
And obviously LA would be on par because we're not that much different in size.
Yeah.
So where does that money have to come from?
That's something we'll talk about later in our report in a future section. Our concern is we don't know where that money would come from.
And then maybe before we get to that, is that a fair assumption that they made, which is they took the North Dakota model and they basically extrapolated to their state, but the North Dakota model does a whole different, as you've already said, doesn't do what we would want to do in a bank. They're more of a bank to banks, So is it really comparable, or is that not a fair comparison in terms of the capitalization cost to get to a bank?
I think that's that's one of the questions that we would have to answer in moving forward. What would be the capital requirement for a Bank of Los Angeles? And that would be a question of what kinds of services are you going to offer, what clients are you going to be serving, and what kinds of loans would you be making? So I think we're not in a position to actually do that kind of calculations at this point.
Even to know scale-wise, like is it because they're dealing with agriculture and would that make ours higher or lower?
Higher risk, or is it lower risk because they're not, are agricultural loans higher risk than a small business loan? I don't know.
That's what I'm asking. So it sort of, it makes the number less relevant to some extent because we don't, because that's a very scary number to come throw at us.
Yeah.
But I don't know that it's directly applicable.
Yeah, we included in the report because it was a number that the Federal Reserve Bank of Boston identified for the review that was going on in Boston. And so, the Federal Reserve Bank, I would assume that they have a good sense of how they would calculate such a thing. But again, maybe there would be limits on what our size would be in relation to what they were thinking about with Massachusetts, or maybe there's a different type of loan product that they were thinking about.
Do we know what they were?
So no, we didn't. We don't have the actual math behind the report that the Federal Reserve Bank released, but I think it's fair to say that a significant capitalization would be required in order to get the bank started. And clearly, the most current marker we have is the one done for Massachusetts. When if we go down that path, we would absolutely need somebody who can do that math for us and indicate to us what capitalization we would need in order to make the municipal bank work.
That's both a legal question and a mathematical question.
Yeah. Yeah.
It's going to be one of our bigger challenges.
It's yeah.
And regardless of what we determine it to be, I assume that there's a regulatory framework that would mandate a minimum level of capitalization based on the risk profile and so forth, right? So
exactly.
Whatever we say it might be, it could be lower if a regulator says so.
Exactly.
I mean, it could be higher.
Yeah, okay. Absolutely. In order to participate in some of the federal banking system, right? So FDIC, you would have to have a certain capitalization level. So if you want to have the FDIC insurance, for example, or if you want to participate in the Federal Reserve Bank, you would have to have a certain capitalization level. And so that's where this becomes a very significant factor.
Just to add on from that conversation, I would assume, and some of the things that my colleagues were saying on that, even if we were to assume that our capitalization were significantly smaller for some reason, you're still talking in the billions of dollars range. And just our cash flow alone, we've got to borrow to get through payroll.
Yeah.
And with our trans and everything, it's not that we have that sitting. And I would assume that the dollars that we have, we don't have access to, and those are pension accounts and others that can't be used as part of this capitalization or initiation, correct?
Yes. Yeah, and those are some of the issues we'll be getting to later. A lot of the financial resources that you have, that the city has available, are the regulatory constraints on who makes decisions on where to put that money.
Right.
Have a lot of restrictions where it would be difficult to put this into the municipal bank.
Okay, members, anything else on this section? No. Okay. Thank you very much.
Our next section concerns actual bank models, and Henry Flatt in our office prepared this section, worked on this section, but he had to leave town today on a personal matter. So I get to cover it for him, and hopefully I'll do it justice. There are basically, so we were looking at the legal and regulatory framework for banking in the United States, and there are some banks that are chartered under federal law, and in California, apparently, most of the banks are chartered under state law. There are a lot of benefits to chartering under state law as opposed to federal law, so that's where we're seeing a lot of that activity. State law allows for a chartered commercial bank and a chartered federal credit union. Those are the two. They basically set up the regulatory framework and allow somebody to decide, okay, I'm going to create a bank, this is how the bank is going to be structured, this is who's going to be on the board, this is the capitalization level, this type of business they're going to do. And in fact, that's authorized under state law. There is no charter for a public bank under state law. And again, that is what AB 2500 attempted to do, but it was not successful. If such a charter existed, we would be having a very different conversation, because that would have, in law, a framework that would allow us to know what we needed in capitalization, what we needed in collateral, what we needed in terms of a board, what our rights and obligations would be with regard to managing that organization. And that doesn't exist. And so we're left with trying to see if there's a way to fit everything that we have within these two chartered models that are in front of us.
Can I stop you there, because it might direct the rest of the conversation? Why does it matter? Why would it matter that it's a public institution or a private institution, as long as it's chartered through the normal process of chartering one of these two options? Who's the owner shouldn't really make any difference, it seems to me, in how you go forward and charter.
I've been grappling with understanding that, in a sense. The first off is, for example, and again, this is in the later chapter, our city charter does not allow the City of Los Angeles to own commercial business. So there's that. But so again, if the City of Los Angeles, the corporate entity City of Los Angeles, owns a business, we're basically the shareholders in that business. And so the city is a shareholder. I'm not quite sure what that means under federal corporate law. I think, again, we need some good attorneys to tell us what that means. Can we own a corporate entity in some sense? I think it's a little odd. But then we get to these rules where there is a vast body of regulation of state law that controls how local governments can manage its money, right? And so where we can put our money, how we choose the places where we put our money. And all of those are structured in a way that make it difficult to fit into the commercial model.
Okay.
The primary of those is the prudent investor rule that we'll be getting to later. And so dealing with all of those regulations and the startup just makes it not an easy fit. And that was actually one of the findings of Public Bank LA, who provided a report to us. They're an advocacy group for public banking, and their finding was that chartered commercial banks are not a good fit for a public bank. So I think there's some acknowledgement that there are difficulties in here in fitting all of this together.
Sorry, didn't mean to take.
No, that's fine. And so there were a number of questions from the committee about other quasi-banking institutions or that might exist, and so we've provided a summary of those. With regard to tribal banking, there are specific federal laws that allow them to use to set up their own banking systems, and they use community development financial institutions, CDFIs, as the structure to get there. And it's unique in that they're not actually required to have insurance when they do that, although many of them do have access through federal law to FDIC or NCUA, which is the insurance. NCUA is the insurance product available to credit unions. So in tribal banking, federal law kind of sets it up to allow the tribes to set up a bank for the tribe. But for the city of Los Angeles, it wouldn't work because state law requires that the local governments put their money into a chartered bank or a chartered credit union or a chartered savings and loan type entity. CDFIs are not chartered institutions under state law. So we have we kind of have a block there from state law in using a CDFI as our model, as a quasi-banking opportunity. There are a lot of CDFIs that are operational in the city of Los Angeles right now, like LISC, LIAF, the Enterprise Community Loan Fund. There are a number of others who use the CDFI fund process in order to fund loan opportunities in the city of Los Angeles. So it's not something that's unknown to us. And one of the issues that we talk about later is maybe we can do more to partner with CDFIs that are operating in city to improve what's going on there. There are bankers' banks, and I think bankers' banks are actually a type of chartered commercial bank where a bank is participating in loan activity with other banks. There's Mr. Blumenfield, you asked about the infrastructure bank at the state. That is a pass-through finance entity. They don't accept deposits. They were funded by the state government, basically general fund contribution to the infrastructure bank, and they make loans and facilitate loans with local governments. And so they're not an actual bank, but it's a type of activity that the city already does. We have a number of programs we can talk about later where the city is facilitating loans into other organizations and projects. And that's same with the EXIM Bank, which is a federal equivalent, where basically both the infrastructure, the iBank and the EXIM Bank, are taking risks on their loans that commercial banks are not taking, right? And so that's something that we do with a lot of our housing loans, for example. We'll take a residual receipts loan, take a lower position on a loan, accept more risk in order to facilitate the project coming along. That's what these kinds of banks do. Then there's something called a public benefit corporation that is a new entity type that was authorized by law, and I don't know if this is federal law. This looks like it's federal law, general corporation law, or if that's state law. And basically a community benefit corporation can set up their structure in a way where the benefits that they receive are based on adhering to certain social, ethical, environmental standards. That's built in, it's baked into their mission. So they're obligated to comply with these mission components, right? That's a problem that we see with commercial banks and credit unions, right? Commercial banks in particular. Their primary mission is driven by their fiduciary responsibility to their clients and their customers. And that overrides everything else that they're doing. Whereas a public benefit corporation would also be obligated equally or more so to comply with whatever ethical, social, environmental standards that they've accepted into their mission. The problem with the public benefit corporation is they can't accept deposits. So we have, again, another block in trying to use this structure as a bank, right? As we discussed later in the report, one of our concerns with using the commercial bank, charter commercial bank model is there's no way to set ethical, environmental, social standards above the fiduciary responsibility of a commercial bank. And so how do you create a structure that you can ensure follows those higher standards in business practices? How do you ensure that there's some control, there's some enforcement of those higher standards? And when it's under that prudent investor rule, you really can't put that ahead of the financial options. And that's what happens when you're doing residual receipts loans, for example. That's what happens when you're taking a higher risk on the loans that you're making. So that was Public Benefit Corporation. We covered Export-Import Bank. And then there was the city's experiment with the Los Angeles Community Development Bank that emerged from the empowerment zones. I may need Avania's help on this. She spent a lot more work on this. This was, again, not a bank. This was a program where the city was facilitating loans, participating with commercial banks and our own Section 108 resources in order to facilitate projects. And it was just not structured in a way to be productive. The bank eventually went bankrupt. We had to close down that program. And it simply was not effective and productive in meeting the goals. It turns out a lot of the loans that came in, once the banks started looking at them, they realized we can just do this on our own. This actually looks like a good project. And so this entity was half in, half out, and then things didn't quite work out. So that model definitely, we would not want to replicate that. So that's the bank model chapter.
Okay. Questions on this section, members? All right. Just quickly, on the Public Benefit Corporation, you said couldn't receive deposits.
Yeah.
A public benefit corporation can't receive deposits, period, or they just can't receive our deposits because of our unique obligations with regard to the taxpayer funds?
It was our understanding they could not receive deposits from anybody.
So even in the commercial sector?
Okay. In the next chapter, we have a review of the city banking services currently in operation, and I'd actually like to invite the Office of Finance up to explain. This kind of gives a sense, as we were talking internally in our office, the City of Los Angeles banking services are not like your checking account or my checking account. City of Los Angeles is more like a multinational corporation with dozens of banks it does business with, millions of transactions, billions of dollars that are being managed on a daily basis. It's an extraordinary amount of work the Office of Finance is doing on a daily, hourly basis to make sure that the city is fully capitalized. And I don't know if Todd is making his way forward. Because one of the concepts was that the municipal bank would serve as the city's bank. And it would be extremely difficult to set up an institution that would be able to take all of this immediately or even within a few years. Just the infrastructure that exists in a bank is so extensive that we wouldn't be able to get there in a way to handle the kind of business load that we have. So I'll turn this over to Todd.
Good afternoon.
Good afternoon. Todd Bowie, Office of Finance. And I know this is a topic, obviously, we've covered with many of you, particularly in the Budget and Finance Committee, over the past number of months as we've been going through the process of identifying our banking requirements going forward. And as you're aware, we're currently in the process of bidding out general banking services for the city. Before you on page 26 is a listing of very many of the banking services offered through the city, and these are primarily services that are contracted through the Office of Finance. It is quite a wide array. The needs of the various city departments are quite extensive and in some cases quite disparate. One thing I would like to mention is that, and this is again something that we've talked about in the past, when we're talking about the city's expenses for banking services, I do want to clarify that for general banking services, so those that would be covered under our commercial banking agreement, sans our credit card services that we receive, that's really about a $4 million a year service that we get from the banks. And so I know there's quite often a lot of very large numbers that get bantered about, but for us it's about a $4 million service that we receive from the bank. And outside of that, we have a number of card-related services being provided by U.S. Bank. We've recently established new checking and commercial card services with Union Bank for the DUN program. We have extensive merchant card services. We've just executed a recent agreement through a cooperative agreement with Elevon that's significantly reducing our costs related to merchant services as well, and then a variety of other ancillary services related to banking. And effectively, every single department in the city, including the proprietaries, are impacted and dependent on the banking services being provided through Office of Finance's agreements.
Clarifying?
Yes, you bet.
The $4 million that you talked about, obviously there's a lot more than $4 million flowing through all of these programs.
Absolutely, yes.
So to be real clear, when you say $4 million, you mean that's sort of the net cost to us for these services? How much it's costing us, even though there could be $1 billion flowing through,
Absolutely, yes. There's the fee for services that we pay in order to facilitate the millions of transactions and billions of dollars that we're transacting.
And is some of the services, are they doing it just for the fee, or is there money that they're making on the float or something? Is there any other money that they're making on our services that is not a direct payment?
A little in some cases. For the most part, there's not a lot of money being made right now in terms of interest rates as they are. So that's not been a great boon. And then also, as has been mentioned in the CLA report and by John, the collateralization requirements. So doing business with the city, they're required to have 100% collateral, and that's going to restrict their ability with cash as well. So there are some of that is occurring in some of these types of agreements, but it would be pretty marginal.
$4 or $5 million worth of profit off of us as a city is what you're saying?
No, not from that. I would not think so.
Okay, thanks. Sidetrack. Just wanted to understand. Go ahead.
In terms of some of the other items, I think agree that this is a very good report, and I know that the CLA put a great deal of work into it, and we worked with them on it as well. I've learned quite a bit myself from this report, so it's quite excellent. And I think the other thing that's worth pointing out is I think there's a lot of valid issues as it relates to the Treasury and the prudent investor requirements of the city that's outlined in here. And with regard to where the city puts its money, the thresholds are significant. As you know, obviously we currently go through a bid process in order to identify who is going to be providing these services to the city, but then also the treasurer obviously also has some jurisdiction to identify or establish the actual banks that we will do business with at the end of the day, according to the prudent investor requirements and with regard to the maintenance of public funds. And so that is another, I think, important consideration in terms of the types of vehicles by which the city could put its money. The other major hurdle, which I think this identified here as well with regard to city banking services, is really all of the underlying technology requirements. We rely heavily on banking technology. And in order to facilitate the types of transactions and the myriad types of transactions that we do, there are a number of different banking technology systems and networks that we rely on, and that also require a significant amount of integration from various different systems across the city. And whereas the banks tend to be a little bit more flexible in their technology, or experience has been that the city is much less so. And our ability to integrate with the banks can be very costly as well. Otherwise, I think that this report, quite fairly points out a lot of considerations and does a good job of outlining the various services that are being provided to the city via the banks.
Thank you very much.
Okay. Our next chapter, implementation issues. And at this point, if the city attorney's office would be able to join us, Noreen Vincent or Gretchen Smith, we worked with the city attorney's office very closely on this chapter in particular, because this is kind of the meat of the matter. What it would take to form a municipal bank, a public bank in the city of Los Angeles. And so I'll just kind of run through each of these issues, and we've tried to identify any changes that in state law, local law, that would be required in order to address this in one way or the other. And a number of these issues were also addressed in a previous report that the city attorney had sent forward.
Just clarifying questions for, I think, public consumption in my understanding. So up until now, we've mostly heard about the barriers. Am I understanding you to say we're now going to hear about the possibilities?
We're going to talk about those barriers in greater depth. Unfortunately, yes. But I guess the opportunities in here are how you deal with those barriers is what it comes down to, right? So first off, the city charter does not allow the city to own a business. So if we were to pursue this as a business, then we would need to go to the voters. Charter change would be required to address that. Okay, so that's pretty straightforward. The role of the city treasurer, and by the way, I actually, just as a side, wanted to thank you for this assignment, because I think all of us have learned a great deal about banking in details that we never knew that existed. Yes, it's been actually an extraordinary opportunity. So,
and this enjoyed it.
Yes. And we get to share that with you right now. So one of those is the role of the city treasurer. Both the city charter and state law give the city treasurer independent authority in determining where the city money goes, right? So they are empowered to decide which bank receives our services, what services they receive, and they use the competitive bidding process to make those decisions. So this is an important opportunity for checks and balances to make sure that the city's billions of dollars are not being placed based on political decisions, but are being placed based on the fiduciary responsibility of the treasurer, right? So this is again state law that has set this up, and our city charter reinforces that. And so if it was the will of the council and the mayor to decide that the MBLA would be offering the city's banking services, you would not be able to do that under existing law. You would either need state law and the charter to change to allow you to direct where those banking services would go, or MBLA would have to be competitive in a bidding process in order to receive those services, right? Or, there would, and we'll talk about that in the competitive bidding process. So really that's a significant issue in one way or another. MBLA could not be, by default, the city bank for our city's banking services. Is there, if Noreen sees something else she needs to, she'll let me know. And in a related matter, proprietary departments, again, have independent control over their funds. And so if it was the will of the elected officials of the city that those departments participate in the bank, there would have to be some kind of acknowledgement of that in the charter that got us there. We were also concerned that since LAWA is regulated by the federal government, that there may be some federal regulations that control how their money is used. And the Harbor Department is falls under the State Tidelands Trust. And so we were concerned that there might be some state regulations that control their financial decisions. So we would need to do some additional research on that matter to follow through on that. Competitive bidding. The city charter requires competitive bidding for just about everything that we do, with some exemptions. And there are, in certain cases, opportunities to make findings for a sole source contract. But considering the very robust financial services that are available and operate in the city of Los Angeles, it would be difficult to make sole source findings on banking services. So again, competitive bidding would be a requirement here. The MBLA would have to pretty much, we believe they would have to participate in a bidding process, and they would, wherever the chips may lie in their competitiveness in the selection of that process.
Well, just on that point,
Yeah.
that would be true if it were considered to be a contracted service.
Yes.
But if the bank is a division of the city government, let's say, whether it's wholly owned or a proprietary department or, just an operational department within the city, we wouldn't be contracting out a service. We would be instructing a city department to perform certain functions. And so I guess, how confident are we that competitive bidding requirement would be triggered in the first place?
I think that depends on the structure of the bank at the end of the day, and what the charter, if there's a state charter that sets it up, then that allows for public banks, that would probably be the answer to that question. But if we have to use a chartered commercial bank law,
right,
it's probably an independent body.
Yeah. Okay.
So that's, I think, where we get into there are a lot of questions on how it moves forward. Okay, so the next big issue is the prudent investor rule. It's called the prudent investor rule, but this is law. This is a law that's been adopted by 46 of the 50 states, including the state of California. And it sets up the obligations of anybody making fiduciary decisions with regard to other people's money, whether that is a commercial bank or whether it is you as elected officials deciding where city money goes, right? So you have certain obligations for which you are actually personally liable regarding the protection of the taxpayers' money. So when you are deciding how to approve an RFP for selecting banking services or approving budgets and such, you have obligations to protect the taxpayers' money and ensure that the taxpayers get a good return when that's appropriate, that the funds are spent in a fair and appropriate way, and that there's protections in place to prevent fraud, that there's protections in place to prevent loss, that prevent risk. And so the prudent investor rule becomes the three key terms of preserve capital, ensure adequate liquidity, obtain a sufficient rate of return. So all of your decisions are based on that. If, again, the concept of a public bank is that you are also trying to ensure that there are social, ethical, or environmental standards by which the bank is operating, you can run into some conflicts here, right? And your primary response under the prudent investor rule is always to protect the money under these three concerns. Those other concerns are secondary at best, right? So there could be some difficulties in making decisions based on this point. And I don't know if the city attorney has any more thoughts that I should that are appropriate to
I think you stated it very well. I think your whole report is very well done. And I think one of the things is that we often go to local rule, home rule, because we are a charter city. I think in these areas of the prudent investor standard and the requirements that a bank must meet in order to qualify for city deposits, it's been declared a matter of statewide concern. So the state basically said these matters and how your fiscal health affects every other city in the state, and therefore we basically are going to step up and preempt local decision-making in this regard. I think the other thing that John pointed out is critical, is that essentially state law does give the discretion to the treasurer to determine the time, manner, and placement of city deposits. The treasurer is a fiduciary. The council members who are involved in decision-making also are fiduciaries, and the need to adhere to the prudent investor rule is really paramount, as John has emphasized.
If we play this one very specific example of how this would play out, if MBLA makes a loan and the loan is not repaid, the prudent investor rule requires that the bank take action to ensure payment. And ultimately, that could include foreclosure on property that's involved. That could be very uncomfortable and difficult for a city-owned bank to be foreclosing on property owned in the city of Los Angeles. And it's when it gets down to that kind of personal one-on-one decision-making where it can be very difficult, and the city probably doesn't want to be in the position of foreclosing on properties. That's a very bad place for us to be in, especially when we're trying to do the kinds of challenging, riskier types of activities that might take us in that direction. So again, prudent investor rule is a part of state law. If there were meaningful ways or appropriate ways to amend that law, then we would need to talk to the state about addressing that. Again, there might be ways, if there was a public bank charter process where that could be addressed, but again, that doesn't exist right now.
Redefining the scope of the potential responsibility of an institution in the same way that public benefit corporations have now been created that don't have exclusive fiduciary obligation to the shareholders, but there's a societal obligation that's built into that as well.
Yeah.
But that would require state legislation to create the a vehicle by which municipal funds could be invested with a broader range of purposes other than return on investment.
Exactly.
Okay.
I think we've touched on mission compliance before. There needs to be some kind of method in place to ensure that if the bank is operating on standards for ethical, social, environmental enhancements or betterment or improvements, that you can enforce that. And right now, because of the prudent investor rule, kind of puts some conflict in that area. So again, a charter allows you that opportunity to ensure enforcement of that issue. So, collateral for city funds. This is a big one, and I frankly go into a death spiral on this one. Right now,
Easy does it.
yeah, I know.
We still
Right.
need you around.
Yeah. Right now, law requires that when the city puts its money into a bank, that bank has collateral at 100% or 100%, 110% of the amount that the city puts in. So we provide about, on any given day, we have about $100 million in the bank. That bank has collateral of $100 million or more to back up the city's deposit. And so whatever bank we create under state law would be required to have that kind of a capital stack or a collateral stack behind it. And it's one of these weird things where I don't know where it stops. So we fund the bank, and then we have to fund the collateral to make sure that we have coverage for the money that we've put in. But is that money we've put in for collateral, or does that need to be collateralized? I don't, it turns into this weird thing of I don't know where it stops on the collateral side of things. And I don't know if anybody could clearly answer that. I don't know if anybody's looked at it. So we need to figure out, and again, I keep coming back to it, a public bank charter system would clearly establish what kind of collateral, what kind of risk protection would be in place if we have a public bank and we have our money in that public bank. But again, this is a state law requirement where there's at least 100% collateral backing up all of our deposits in the bank. And then we get to the really big one that we discussed earlier. Yes?
How does that work with regular banks? I mean, so we have $100 million in the bank, and we're banking with Wells Fargo, and some other city has $100 million. They get to count the same $100 million each time?
No. That's why there are so few banks who actually bank with local government.
So they have to have the full amount of what we're passing through in collateral.
And state law designates the type of collateral that are acceptable. So most of the types of collateral that are acceptable are types of municipal bonds, and there's a list of about 10 or 12 different sources of collateral. It's actually not cash, but this type of collateral has a cost for the bank that is holding our deposits, and so that would
have to hold our assets too. So I mean, if we give, in essence, they own all the city assets, they have all the collateral.
We don't put our assets in as collateral. They have to identify.
They don't own the city assets.
Yeah.
And the accounts are liquid.
But the Citibank would, yeah.
Oh.
So Citibank would own the city assets.
Yeah.
I mean, could it go sort of reverse spiral so that, okay, we're always going to have plenty of assets because we own a lot of land?
Yeah, that's where we're getting into why this whole collateral question gets really complicated.
I don't think you can pledge city property, so we can't lien city property. So if we, and I guess this gets into the question of what would the structure of this be? Who would own it? Would it be a separate bank where the city formed it, but we didn't own and operate it? Are you looking at it as being another city department that is simply?
They can't use our assets. Then I mean, if it's a city-owned bank, then aren't our assets?
Well, would we be pledging the assets for a private depositor, a third-party depositor? So somebody deposits money, and are we using our assets to secure those?
And also, if we used bonds to pay for those assets, we probably could not use the asset as collateral if that's, backing up the bonds. Yeah, we already own it.
If those assets were pledged to pay back a bond, then those are tied up to the bond. We can't in any way imperil or jeopardize that collateral.
Right. And if we can't count it's one thing if we counted our current assets, because we have a lot of assets that are not bonded or, we just own over time, but
Well, but the other thing is, if you are going to be, if the city is going to be the bank, then our general fund is also the backstop. So you now have the general fund potentially on the hook. And I think it depends on what are we envisioning? Are we going to have a bank where private parties can make deposits and get loans from us?
or can you create a firewall so that the banking that is backed up by the city's assets is the city banking, and the banking that's backed up by,
I don't
the
know.
private-
I mean, those are all good questions, and I don't know, because we really, I think there are various permutations which can occur. And I think, again, it goes to the ownership structure. So if the city is going to own it and we make the bank available for people to draw loans, to deposit their money, the question would be then, who is going to secure that? Are we going to be FDIC insured? Are we going to qualify for the federal insurance? Which, again, goes into how long the bank would have to be in existence, what kind of track record the bank would have in order to
But
qualify.
you had the firewall so that, because part of the problem, the reason you have to
don't know.
have so much capital is because of the city's huge.
I'm not sure that you can create a firewall. We can certainly look at that, but I'm not sure that you can create a firewall because it would be all one institution.
Can I just ask an even more basic question? Because I'm not sure I'm fully getting this. You have a capitalization requirement when you set the institution up. How does that relate to the collateralization requirement that you have operationally? Is the collateral just to provide liquidity? I'm not sure or once you have adequate capitalization, doesn't that provide you adequate collateralization as well?
The sources of collateral identified in state law are not, that are acceptable under state law, are not the assets of the bank itself. They're things like municipal bonds. So the bank may have $100 billion in assets in the bank, but it would have to bring in something that's, I think, independent of that. I don't know. We have to look at that a little closer, but I don't think you can say that the assets of the bank are the source of the collateral unless the bank is holding the bonds that are acceptable under state law.
Well, maybe I'm not understanding the concept. When I think of collateralization, I think of security for amounts loaned. Is that what we're talking about, or are we talking about something different to back up the cash flow?
Yeah, it's collateral for the deposit. It's not, it's kind of, if, I give you $5, you have to have an additional $5 to ensure that if you lose my $5, I get my $5 back.
Okay. Not sure I follow why that should be. Let's make it real simple. You bring money into the bank, you put that money in a vault. That's one set of circumstances. You have adequate collateral for that deposit because you have the money sitting in a vault. But if I take that money and I loan it to Mr. Wesson, even though he's a great risk, still I have to be sure that if he doesn't pay it back, there is collateral to ensure that that money is not lost.
Yeah.
So I don't know why our cash flow operations would need to have additional collateral beyond the cash in and the cash out.
Cash is not an accepted form of collateral under
then
state
you have
law.
Your
So you
$3
have,
billion in capitalization or whatever it is that we set up in the first place.
yeah, you have to have, yeah. So that's a good question. I mean, it's certainly, the way I understand it, it is a burden on banks. It's above and beyond their assets.
Okay.
Yeah. So
That's one we can come back to. I'm still kind of lost on it. So
yeah,
but
it's
a
as
big
I said,
number.
this was my death spiral. Right? There's a reason I said that.
Okay. Okay, and I presupposed the discussion about capital, which you're going to get to next, I guess.
Exactly. So the startup capital is really the big problem.
Do you want me to speak to that last question?
Do we want to?
Sure.
Okay.
Todd Bowie, Finance. And just briefly, my understanding of the collateralization requirement, and I think it's going to be different depending on the nature of the deposits that are being collateralized. So, for instance, city deposits have that 100+% requirement for collateralization. And careful behind. There's in essentially my understanding is that that money is essentially being set aside above and beyond the money that we have on deposit at any given point in time, and it's sort of a hedge against failing of the bank. So if the bank was to fail here and we had $100 million on deposit, the bank fails, but then we have $100 million over here that's being held in these various investments that would then be able to make the city whole again. But those requirements would deviate, though. I don't know that it's a 100% requirement for other types of deposits.
Okay, I think I get it. So it's the collateral is actually in a non-cash asset of value to ensure that if the cash is lost, there's some resource by which the cash can be replenished.
Right, and it's a
But
state requirement.
Again, it's outside the direct ownership of the bank itself, right? So it's bonds, so theoretically somebody else the city can say, hey, wait a minute, our collateral is over there in those bonds, cash in those bonds to give us because you bank have failed.
It's basically like umbrella insurance.
Yes.
Beyond
There we go.
what the FDIC would provide. Okay, got it.
Okay. Okay, so the big one we touched on earlier was startup capital. We are not able to find a source of capital for this. The two sources I think that kind of, if you want to try, would be either City General Fund or philanthropic resources. City of San Francisco threw out the concept of using bond money, which would require voter approval on one hand. On the other hand, that would also require that the money be used for brick and mortar improvements, So since starting a bank would not be, and financing a bank would not be a brick and mortar improvement, we can't see how using bonds would work in any way, shape, or form to capitalize a bank. So that leaves using general fund money in some way, or finding a philanthropist who would be willing to bankroll, literally, a municipal bank for the city.
So the other areas that people sometimes talk about are the pension funds, for example, and as a source of capitalization. Obviously, they have independent fiduciary obligations. Their boards operate independently of the control of the council or the mayor. What else have we talked about as being? I guess
that was the largest source. Yeah. So again,
How about a tax?
Which one?
How about a tax?
A tax? We did not look at a tax of any kind, but I don't know, a special tax or a general tax. The voters again would have to approve it.
Voters would have to approve it, but I mean, that's usually where we go to get money.
Yeah.
Because even a general obligation bond would need to be repaid, so that wouldn't be an adequate source of capital, but it would have to be a tax increase.
Yeah.
Pretty much. And it would have to be a special tax to be devoted to
The bank.
this particular purpose. And then we would have to wait a long enough time for enough tax revenues to be collected to be able to provide that capital for the creation.
Unless you have if you have a revenue stream through a tax, then maybe you can bond against it in some way.
No, because you'd have to repay the bond.
Yeah,
so the bond is already encumbered.
You know what, if I could just make
Sure.
a statement, maybe a question, I don't know what it is, but when I thought about having a conversation where related to the creation of this bank, I never thought that it was going to be easy, because if it was going to be easy to create some kind of municipal bank, it would have already been done. I also would believe, and I have nothing to back it up, that, you know, the banking institutions are one of the most powerful institutions on the planet, so of course they would do everything that they can to ensure that this was a very difficult process. And as you mentioned, as you're doing your downward spiral, I get all of that. But for me, if you want to get the attention of the banking community, if you want them to take you seriously and send a message that there are things that they do that we don't particularly agree with, then I think that you might want to look at, when you come back with us with a report, to say, this is what you need to do. You need state law. Let us determine how difficult that is. If we need something changed in state law, we have relationships. I'm not saying it's a guarantee that we could do it, but you should give us a list also, as you're telling us all of the challenges, which we already knew. Also tell us what we would have to do to get beyond those challenges. Let us, you know, just because something, a firewall, just because that is maybe not in place now, that doesn't mean we can't creatively come up with a way to do that. So I want us to do more. I'd like to know, if we wanted to do it, how we would go about it, and let us assess the hurdles. You know, just like Bob said, maybe we could, put something on the ballot, maybe, or what have you. That could be a dumb idea. It could be a bad idea. When I first proposed this, I said that it could wind up being the dumbest thing that it is, and we would not want to put the city in a situation where we would do something that's dumb. Sometimes we do that because we're human beings just like everybody else, and everything that we do is not always right. But what I do want to do is have a very right conversation where it relates to the creation of a municipal bank. Because what I believe is, if there are ways that this could happen and we begin talking about what we would have to do, I do believe you get the attention of the banking industry, which right now, they just tell us to go, you know what, in our hat. And I have dear friends that are in the banking industry, so they have to believe that we are serious and that we are looking at ways to make this happen. So I'm just saying, Mr. Chair, I get all of this, and you know, if I would have listened to everybody when I was a kid, trust me, I wouldn't be sitting before you right now. That's right. Okay, I would not be sitting here right now. And maybe we wouldn't have the diverse council that we have right now. We wouldn't have. So help me win. Give me options, and let the smart guys on this council figure out if that makes sense.
That's chapter 7, 8, and 9 of our report.
It actually is. So, Mr. West, if I can,
See, I'm one of those guys.
I appreciate you haven't read ahead. You don't know the end of the story yet.
No, I'm one of those guys. And if you sit down and you have, when people come and meet with me, I tell them, cut that out. How do we win? I don't need that. Tell me how to win. Tell me how to deliver the services. So maybe you start on the positive and work your way down. But with
Mr. West, the reason you don't need that is you count on the rest of us to give you that. so if anybody in the banking industry doesn't take us seriously, they should look at the 56-page long report that everyone in this city grabbed in order to prepare to analyze every conceivable aspect of this issue. It's the single longest, most thorough policy report I've gotten on any issue we've ever worked on in the 8 years I've been in council.
I don't doubt all of that, but I think that as a strategy, we need to go into this as saying, you know, looking at it from a more positive perspective and doing it early. And I'm not saying that you're not. I don't want you to think I'm saying anything about the work that you or the staff are doing, because I wouldn't have asked you to do it if I didn't have 3,000% confidence in you. But the point that I want to make is, let us start thinking strategically as we are having these public conversations. And I think we want to make sure that we're sending the right message, that we are serious. And I don't want people to think that you guys are just telling us, you know, I'm sorry.
No, it's okay. You're channeling Mr. Harris Dawson as well. So, but we are going to get to that, right?
Yes, we are.
Before we finish today.
I think we
and
are.
if we don't, I just added my 2 notes of things that I want to add on the supplemental report.
Okay.
So go.
And just to add on to my channeling role, I feel a particular amount of urgency at this moment, and these moments come and go. But, you know, we have literally people running for governor asking us what they can do to be helpful. That goes away at a certain point. And you want to be able to say concretely, if in fact there are things that we need. This is also true at the federal level. People are knocking on our doors at this moment in history, and so we want to be able to seize that and make an ask that actually dramatically improves the situation here in Los Angeles.
And as I've gone through each of these detailed issues, I've tried to point out where state law would be changed in order to facilitate this, or the city charter would be changed to facilitate this. So we really did try in this chapter to show where the issues are and where solutions are, to address. Right.
Keep plowing forward.
Okay.
What we're going to do at the end is I'm going to ask
Get back
to, when we come back, to extract all those things in kind of a list form, so we know what are the changes in law required at state, federal, local level, and what are the specific list of steps that would be necessary to finance and set up an institution in a kind of a list level. It's a lot of it is in here, but it's embedded in ways that you don't have we don't have a to-do list, and that's we want the to-do list.
Yeah. Okay.
So.
So the next point on here, bank has to have capital reserve requirements, federal law. If you're going to tap into the Federal Reserve System for using cash and moving cash around, you need to have reserves that are set up in a particular amount. Depository institution, state law requires that the city choose a state chartered commercial bank, savings and loan association, or credit union. So state law would be, we need to be required, a change in state law would be required in order to allow the city to use MBLA as its bank. Again, there's this concern of financial risk. We would not want to put all of our city money into one institution, because that would increase our risk significantly. Insurance. There was a proposal that the city use its self-insurance capacity to provide insurance to the bank, and that would significantly put the general fund at risk. I think it would probably be stronger to find a way, again, through a state public bank charter system that would allow us to access FDIC or NCUA, some other source of insurance to back up whatever accounts are in the bank. And then the last big issue is bank operations. Again, once we know what kind of bank it is, what kind of services it offers, if it's accepting deposits from the general public or from businesses, or it's serving a specific business sector, that will inform whether it's going to have brick and mortar locations. And that'll help us understand what kind of staff is needed to set up those kinds of brick and mortar locations, or if there's just a simple headquarters. We'll need to set up technology systems, as Todd had mentioned. And this is a technology system that is managing millions of transactions, and it's going to have auditing capacities, and it's going to have a lot of stuff going, security, ensure regulatory compliance, reporting, all those other kinds of functions that an information technology system has. It's going to take some time to develop something like that. And then there's a list of other laws in here that we had not had time. We had to kind of stop writing at some point. And so there's a number of other laws in here that we think are probably relevant in this question. Somebody's going to have to look at those. So that's our implementation issues section.
Okay.
Okay. So
Next.
Next chapter concerns the city's basically financial assistance programs and services, the quasi-banking things that we already do. And we've already been going for an hour and a half.
Okay, yeah, and I'm going to just put this quickly into context because actually Mr. Englander had mentioned to me that it wasn't clear, and so I just want to clarify. Part of the mission that we started with was to examine what would be necessary to create a municipal bank, all of the things that we've talked about. In the process of doing that, we had this discussion about all of the great things that we could do if we had such a vehicle. And many of us had different thoughts about whether it's providing, low-cost student loans, whether it's investing in local infrastructure, providing a loan program to small businesses, and many other things that a lot of us thought could be done with our own banking institution if we had that accumulation of capital and control to be able to do. So, and I don't want to speak for you, but I think when you heard us saying these are some things we would like to be able to do, what you're going to talk about next is the things that we're already doing in those areas and how we could improve upon those, expand those programs to achieve those goals.
Absolutely.
Okay.
Absolutely. So I think, City Attorney, we're finished with the part that you helped us with. Dora Huerta and Pranita Amachia with the CLA's office, and Sarai Baga with the CAO's office. I'd have them come up and just talk about housing, economic workforce development, and infrastructure, our bonding. And then Rushmore Cervantes, I think, is still here, and Sam Hughes with EWDD, I think, is still here, so that they can answer any other detailed questions you might have.
All right. Thank you. Go ahead. Good afternoon.
Good afternoon, Dora Huerta with the Office of the Chief Legislative Analyst. Beginning on page 38 or section 6 of your report, all of our report, provides a description of the 39 city financial assistance programs and services currently offered by the city. Many of the city's programs offer incentives in the form of financial products that are often favorable to conventional lending, so we wanted to lay these out for you. Many of the advantages to the city's products include low interests, residual receipts loans where repayment is subject to the project's ability to cash flow, subordination to conventional lenders, and early commitments, as in the case of Proposition Triple H funds, where a developer can secure an early commitment for a project, allowing them to take that with them to leverage additional sources of funding from non-city entities. Just to highlight a few advantages of these programs, through the Housing and Community Investment Department, the city currently offers incentives through its managed pipeline, under which it allocates its own geographic apportionment of 9% tax credits and federal home dollars. The city is one of very few jurisdictions to manage its own program, where the state's treasurer's tax credit allocation committee, or TCAC, oversees the distribution of tax credits in other areas throughout the state. Control of the tax credits and city funding allows the city to help coordinate these resources to ensure the successful development of affordable housing. Another advantage for the city in managing its programs as it does now is that the city is able to shape many of its programs and tailor them in a way that meet the requirements of other lenders, facilitating leverage of city dollars while flexible enough to allow the city to consider projects not normally funded under conventional programs. Further, these programs operate on providing the greatest public benefit rather than being held to the prudent investor rule or greatest return on city funds. In terms of magnitude of resources, the city has a robust program and is building up its resources for affordable housing production. In addition to the $1.2 billion recently secured under Prop Triple H for permanent supportive housing, it anticipates a significant infusion of additional resources. These sources include the upcoming linkage fee, anticipated to bring in $90 million annually, as well as the state funding from the No Place Like Home program, $2 billion statewide, and revenue from SB2's real estate document recording fees, another $75 million annually statewide. Our report concludes that the city has great flexibility in managing programs that currently offer quasi-banking functions. It can continue to engage the community in shaping upcoming programs and advocate for the city at the state level as programs are developed. I'll turn it over to Pranita, who will cover some of our economic development functions.
Pranita Amatia with CLA. The City of Los Angeles currently funds quasi-banking functions that promotes economic development that allows us to provide loans, technical assistance, banking services to small businesses, low-income residents, and others. Our report lists and describes in brief the existing city programs that promote economic development. You can see that starting on page 45. These programs are led by multiple city departments and provide loans and services on a wide-ranging scale. These departments include EWDD, LA Department of Water and Power, LA Sanitation, Building and Safety, Office of Finance, and Los Angeles Development Fund. Because these programs are operated by various departments, it should be noted that the city would benefit from evaluating how to coordinate in providing these services among the departments to provide more efficient services to the public. Additionally, the city also offers financial services assistance to families, family source centers that are managed by HSID, serves as city's delivery system for anti-poverty and asset building services. These centers have coordinated outcome-driven programs and financial empowerment services for the most vulnerable residents of the city. For example, during tax season, each of the 16 centers are designated volunteer income tax assistance program sites, and they offer free tax help. And these centers also help connect unbanked or underbanked residents of the city with financial mainstream. Additionally, in 2017, HSID launched Free Tax Prep LA, a public awareness campaign to promote utilization of tax credit programs and to promote financial literacy. And Family Source Centers also have certified financial coaches that assist families to reduce their debt, establish financial goals, improve their FICO scores, and access safe and affordable banking products and services. One particular program that we would like to point out is a new program that Office of Finance implements called Los Angeles Community Reinvestment Program, which is a linked banking program that allows the city to provide funding to community banks, who then provide short-term loans to local business. And if there's someone from the Office of Finance who can come here to talk about this program briefly.
As we move through these last sections, I'd ask you to kind of keep it at the top level because we've been going for a while. So we don't need to, we have a lot of programs. We don't need to go into great detail about each of them. Just to know that they're there is useful.
Okay, so Tom Juarez, Office of Finance. So as mentioned, we recently launched in finance the Los Angeles Reinvestment Program. And what essentially we are doing is lending to local banks, who in turn lend to local businesses and folks in the area, and as opposed to lending to larger financial institutions. So again, it benefits residents and businesses within the city limits.
Lending to community banks?
Community banks. So it's, we're initially lending in $5 million increments. That $5 million allows the local bank to lend out in $250,000 increments. So it's the FDIC insurance. And what we ask in turn is that the banks that we're lending to provide documentation that they are indeed lending locally. So it's not money that's just given and it goes into a vacuum essentially.
Okay. Kind of like what the North Dakota Bank does.
Yeah.
On a smaller scale.
On a smaller scale, but that is operating as a state, as that state bank does. in essence, as we are doing in this case as a city bank.
Right. And again, just to promote local lending away from, the more larger commercial banks.
And what,
Yeah, of course.
Your limitation, though, how much you can do of that
Yes.
is limited by which inputs?
It was limited by a council action that was passed, I believe, about 7 years ago as part of our linked banking program. And this is part of the CDARS network. So it's essentially a CD.
the what network?
CDARS.
I don't know what that.
It's a certificate. It's a certificate of deposit. It's essentially a CD program, but it's geared towards commercial banking.
So that
Or not commercial bank. I'm sorry, local banking.
local bank, that could be expanded by an act of the council?
It could, but I would caution that in that essentially when we lend the $5 million out, we're monitoring 20 lending institutions or 20 loans at one time. So it's $250,000 increments times, in this case, divided by 5 million. So it's 20 institutions or loans that we're monitoring at any given time. So we have to be cautious.
How do
in
we
that.
have the authority to do that? Because that is a banking function, right?
It is a banking function, but it's a pass-through through a local lending institution. So in this case, a community bank. So the community bank is essentially doing the majority of the work of ensuring that those funds are lent out.
But we set up the structures of the community bank, what the rules, who.
No, we do not set up
They're
the structure.
existing community banks. So all of the regulatory compliance risk is on the community bank.
Correct.
We give them money.
Correct.
But we only have to give the ones money that are doing X, Y, and Z. If they're not loaning to the right people or doing X, Y, and Z, we have some control because we've got the purse strings at the end of the day.
Correct.
So, I'm pursuing this because this may be a way that we can move into the banking world without having to go through all the hoops that we're talking about and sort of expanding on what you're doing here in terms that it seems like that gives us a very good reach into community banking.
It does. Again, we are lending, and again, we are ensured that, by documentation that these folks are indeed lending locally and not out to other institutions.
And that's not a problem to control that? I mean.
No, again, and again, it's a $5 million investment.
It's not a lot at the moment.
Mr. Harris-Dawson.
Thank you, Mr. Chair. I have a question about this, and I haven't investigated it as much as I should have before bringing it to you all. But amongst the programs that you all mentioned, one that I didn't hear you talk about verbally was the City ID program that was contemplated 7 or 8 years ago, which was a very anticipated program in my part of the city because a lot of people are unbanked, right? And so the City ID, and then we also have a lot of people who don't have documentation, so that they can't bank, and so the City ID was supposed to be a way around that. And one of the things that was discussed was possibly a function where the city could actually help people get their checks cashed, so they didn't have to go to check cashing places, which have all sorts of problems associated with them. Was that part of what you all considered, or did you not look at it because it doesn't seem like it's gone very far since that time? But I'm asking about it because I'm wondering what authority the city was going to do that under.
We laid out a description of existing programs. We didn't contemplate that program in particular, but I can defer to Housing and Community Investment Department if they're here to speak to their community programs that they offer through the Family Source Center that Bernita mentioned and how they reach the unbanked population and help facilitate that.
No.
We'll come back to it. Thanks.
I didn't know about that. That'd be great.
Yeah. Ivania Salvaro with the CLA's office. If I recall, that program was actually under Mayor Villaraigosa.
Yeah.
And it was asked to report back, but I don't think we ever got like the final program to come back to the council. It was sort of still in the studying out there, but it's, we could come back with that.
Yeah.
We could come back and look at it.
Do for the report back?
What is the CID?
The city ID was supposed to be an ID that libraries would issue to people who, all they had to do was show residency in the city, and it let them do things that, if you couldn't get a state-issued ID.
I think it even went as far as to maybe pay some of your city bills. It could be used as like an ATM.
That would be.
No, it was an interesting idea, and it got a lot, I hadn't even remembered that. It had a lot of splash at the time, and then we didn't see anything of it. So on these loan programs, as a direct lend, first of all, on the community bank loan thing, which I think is a terrific idea, and I didn't know about that, so I'm glad to hear about it. What's the performance record that we've had on getting our money repaid to us?
We tried to get some metrics on the performance of these programs, and the data is in a few different places. We didn't have time to bring it all together for you, but that was one of the things we had attempted to do for your
I'm guessing
report.
it's close to 100%, and I'm hoping that it is, because it sounds like a terrific program. Now, offshoot of that, the other direct loan programs that we have, to microloan programs, the small business loan programs, and so on. I assume that in order to achieve our policy objectives in doing that, we make loans to folks that might not otherwise be getting loans from a commercial bank. Otherwise, there's no point in doing these programs. And that means that we have to accept a higher level of risk in making those loans than a bank would be able to do, right?
Yes.
So if we're directly in control of those loan programs, there's a different standard applied to programs like that than there would be if we established a bank to make those loans, because once you establish a bank, there are federal and state, particularly a depository bank. If we're loaning other people's money, then we would not be able to make the same kinds of high-risk loans that we can right now.
You're coming back to the prudent investor rule.
Well, no, I mean, even just banking regulations.
Yeah.
After the stock market collapse and everything else, and even before that, there's, fairly clear standards on who can be loaned to and who cannot, based on their risk profiles. And we're probably right now making loans to individuals and businesses directly from the city that we would not be able to do if we were doing the exact same loan program through a bank.
Yeah.
Right. Okay.
Just, can I follow up on that?
Yeah, sure.
But we could always, if we didn't want the administrative hang-up of making those direct loans, we could always do like a loan loss reserve where we basically put in money to lower to give them the opportunity to loan to higher risk individuals or whatever category we want. We can do it ourselves, as I guess we do through this program, but we also have done it, and I know the state has done it, through loan loss reserve programs where we just basically fund the risk and we expand the pool, or we target the pool by funding the risk as a financial tool. So
that's something we
can do
look
it
at.
either way.
We could look at that. Okay.
All right.
Okay.
We done with that section?
Yeah.
Anything left?
A couple
Home
things.
stretch?
Home stretch.
Okay.
We'll try and get through this real quick. So I think, going back again to the next couple chapters are about kind of coming back around to what we need in order to move forward and some other concepts. So first off, conducting a service gap analysis. I think one of the things we learned is that there are reasons why some people are not using banking services to the degree that they could. And I won't go into some of the details there, but it seems that we could benefit from having better data on why people are not banked or not banked fully What are the limitations? Are there, for example, in some communities, they may not trust banks, and why is that? What can we do to help them get to a point where they might be able to be comfortable using those services? So, or is credit not available in certain communities? Why is it not available in those communities? What's missing? What are the gaps? And are we going to form a bank that's actually going to address those gaps? That seems like where the need is. We need to be able to target our bank to what that need is. There does not, one of the speakers earlier spoke about evaluating Community Reinvestment Act data. And I have not found a city department yet that is doing any analysis of that data. And I think that's, we thought that was a concern. The city should be looking at that data and identifying where there are deficiencies in lending in Los Angeles. The federal government evaluates that data, and they sign off on things in the big picture, but they don't know Los Angeles the way we do. So the city should be investing in evaluating what's going on locally through that data, and then taking our findings to the banks and saying, as Mr. Wesson pointed out, this is where you need to improve, and we have the data to back that up. Public information and education, we mentioned the family source centers and some of the training that they're doing and working with families. There could be more of that. And again, it comes back to this question of identifying the service gaps and identifying programs. For example, the ID program, Mr. Harris-Dawson, you just mentioned. How would we structure that program once we understood what that gap is? And we could fill that in better. This kind of public information education piece would be important. The Economic Development Department is currently working on their economic development strategy, the citywide economic development strategy. There will be new ideas that come forward in that research effort that's going on. In addition, we happened to speak to the California Policy Lab at UCLA, and they indicated that they might be available to help us identify programs that could increase the availability of credit, insurance, or other financial resources for low-income households. So this is a local university who is saying we can step in and we can help do some analysis for you to help find resources and programs to help move this along. We probably could do more in terms of partnerships with existing banks and quasi-bank institutions. We should be taking the data of the service gap knowledge. We should be taking the data of our research, the needs of our programs, and going into the banks and saying, look, you're not meeting our needs here. You're not meeting our needs here. Here's a program area that we identified that needs to be addressed. And doing the same with the CDFIs that are operating in the city, the other quasi-banking institutions that are working in the city. We had a stronger, more focused effort, coordinated effort with all of these organizations. We might be able to address some of these concerns in a way that we haven't been doing so far. And again, this question of doing the market analysis to identify what's missing in the Los Angeles market in terms of credit or insurance or other financial tools, and how can we either get existing banks and financial institutions to provide those resources, or again, if we need a different institution to do that, what institution is that MBLA? So that's the additional considerations. Chapter 8, Municipal Bank of Los Angeles, this tried to get to that point, Mr. Krikorian, that you were saying of what do we need to do? We know that we can form a bank. We know that it could be governed by an independent board of directors, that there probably can have community representation on that board, and the bank services would be available to the residents and businesses of the city. It's these other areas of what's collateralization, what is the capitalization, all of these kinds of things where we probably need to get state law changed. We need to deal with federal and state regulation. We need to deal with the city charter.
Can I have one more question?
Fire away.
To ask John to look into.
Please.
You referenced earlier that there was some conversation about Native Americans and their options that they have for banking. I'm curious, is it possible for us if we did come up with some kind of muni bank, could we partner with them? Would that give us, a bigger nest egg of funds to sit on? If you were to partner hypothetically with them, does that give you more flexibility based on their sovereignty? And so I just think it would be very interesting and to know those things.
Okay, absolutely. All right.
And just to kind of build on that a little bit, because we kind of went over tribal banking fairly quickly, I don't know to what extent tribal sovereignty overrides federal banking restrictions and regulations. And the reason that it's somewhat really relevant to what we're talking about here is some of the tribes are now talking about having their own cannabis programs independent of state and federal restrictions on cannabis. Yeah. And that would suggest to me that they will have the same kind of banking concerns there that we have here in Los Angeles with regard to the cannabis industry. So if there's an opportunity for independent tribal banking around that, then maybe our non-tribal depositors might be able to utilize that, which would achieve some of what we need to achieve in terms of ensuring that these cash industries are banked and therefore paying their taxes. So I don't know. It may be an area that of partnership or opportunity, even independent of partnership. Just the marketplace might dictate that, because I think as this industry continues to grow and has an increasing need for this service, something in the marketplace is going to find a way to fill that gap, and maybe this is the avenue by which that happens.
Yeah.
So.
Okay. So at the end of the day, we have 4 recommendations in front of you. The first 2 are that if the council chooses to move forward or wants to continue exploring this, that frankly, the experience of your city staff is kind of tapped out. We're at the point where we need to bring in some consultants to help us understand federal and state banking regulation. This is really an area of specialty. And we need somebody to translate this for us.
Yeah, and I think, before we talk about spending a lot of money on consultants, I don't think we're quite done here. You talked about the gap analysis. I love the direction of going in that, but on the other hand, I don't think we need to reinvent the wheel here, because I think, we all know that there's a huge body of data and evidence out there about the needs of the unbanked in Los Angeles and why they are unbanked, and the impacts of all sorts of blue lining and other things that have happened over the history of the city that have caused so much of our city to be unbanked. I don't want to spend $500,000 on consultants to tell us what we already know about that. That being said, I do think that all of the points that you've raised in here about improving some of the existing programs that we have, expanding them, certainly utilizing the Community Reinvestment Act data that Mr. West and I were just talking. We've gone to such great lengths to try to capture this data. I'm disappointed that we're not doing more, to utilize it. So I'd suggest that we hold this here in committee, that we instruct the CLA along with the CAO, Finance, Economic and Workforce Development Department, Housing and Community Investment Department, and the City Attorney to develop a coordinated strategy to expand and enhance financial services to city residents and businesses through existing programs, including enhancement of existing housing and economic development financial resources, financial information and education programs, research and monitoring of private banking practices, including analysis of the CRA data, and identification of alternative banking, financing, and investment programs and practices. And then I'd also ask further that we instruct the CLA with the CAO, Finance, EWDD, and HCID to identify gaps in financial services, credit availability, financial institution responsibility, or other financial capacity or accountability measures, and recommend solutions to address any identified gaps. And I think you're honestly a long way to finishing that already with what you have, but enhancing this, I don't think we need to do a complete independent study, but what are those areas where we can improve those performances?
Plus, Mr. Chair,
Yes.
he did say it has been a fantastic journey.
Yes, and
Why
he's
don't we-
enjoying, he
why
set
don't we
out,
let that fantastic journey continue a little longer.
he admitted he's enjoying it, he's learned a lot, there's more even still to be learned.
Mr. Wesson, I told you that the later chapters were going to get you closer to where you wanted to be.
I'd further ask that we instruct the CLA with the assistance of other departments to conduct an annual review of the Community Reinvestment Act data and report to Council with their findings and recommendations on partnering with banks to provide additional financial services to Los Angeles residents. And then lastly, I'd ask in response to the points that Mr. Wesson raised earlier that we have in our next report back a clear list of the areas of state, federal, and charter changes that we would have to make in the law in order to move forward with a municipal bank. And then what are the other steps necessary in our to-do list if we were to decide to move forward with a bank, in particular a bank that could take deposits as well as provide banking services for the city itself. So that's still quite a lot on your plate. In terms of more work on the actual creation, in resolving any of these issues, I think we hold those on the desk, particularly in light of the fact that we have state legislation that's working its way through right now with regard to a state chartered cannabis bank. We don't know what the outcome of that is going to be. That's going to change the landscape that we're operating on maybe as well. So I think this is still a lot to bite off with what I've indicated. Let's focus on those things, and then when we meet again, hopefully we will have made some progress, or maybe there will be some progress in Sacramento, and we'll have a different landscape as far as the actual creation of an independent bank. Yes.
And I think this is covered by what you were saying, but just because I'd like to see at the end of that very clearly what are the things that we can, in terms of our overall goals, what we can do with all this expanded stuff that we're talking about, and very clearly what are the things that are just beyond that line that we would need the municipal bank for. Because in my mind, it's kind of muddled. There were some things I thought we needed a bank for that it looks like we could do, and there's probably things in the other direction. So to have a ledger kind of thing of, if we push the envelope on all of our existing authorities, we could do all this. We're never going to be able to do these things unless we have that. And then, because that'll also help us with our cost-benefit analysis in terms of, not just money cost, but, political capital cost in terms of making some of this happen.
Absolutely. That was one of the recommendations 3 and 4 we're trying to get at that point, is that with our existing authority, the city's existing authorities, you may be able to get a long way down the road to solving the concerns that brought this forward to begin with.
You made that clear, but not clear that we can get there, but not clear in terms of like, this is what you can do, this is what you can't do.
Yeah.
In other words, this says what we can do, and then to Mr. Blumenfield's point, if we had this additional vehicle, what more could we do, if anything? So,
yeah, absolutely.
Okay, is that all clear?
Yeah.
I want to say I started the meeting off, and I want to say again as we conclude the meeting, this is a fantastic job. It really is, and I want to thank you, John, but everybody else who participated in this, and there were a lot. When Mr. Wesson asked us to look into this, we threw a lot more into this discussion than we ever started with, and this report really does a tremendous job of showing us what we need to know to make the difficult policy decisions around this area. So it really is a very, very productive, very thorough, very helpful report. And We appreciate it very much. So thank you to all of you who were a part of this. Okay, we have the recommendations. Any objections to moving forward, as I've indicated? Without objection, then that will be the action of the committee. And John, we'll see you next time.
Absolutely.
So go back on your fantastic voyage.
And stay away from that death spiral.
Please.